Welcome to the Retirement DNA Podcast. I'm Duane Johnson. We believe you deserve financial advice based on your best interest. In our podcast, we will discuss all aspects of retirement planning. Today, we're talking about taxes. Today, we're going to sit down with the Duane Johnson Group's very own enrolled agent, Valarie Lukacsffi. We're going to find out what's going on in the world of taxes for 2026, and we're also going to talk about some of the things that you can help save you taxes this year and possibly for the future. So, Valarie, welcome to the podcast.
Thank you for having me.
Can you tell us how long you've been doing taxes and approximately how long you've been running the Duane Johnson tax office?
I've been doing taxes about 20 years, and this is my 12th season with the Duane Johnson Group.
So you've been doing this for a while, so that's good. So let's get right into this, and what we're going to do is just kind of go through questions, kind of a back and forth here possibly, on talking about the big, beautiful bill that everybody's been talking about. Well, with the big, beautiful bill, what we kind of want to know, what other people want to know, are there any major tax cuts to this?
So, yes and no. So in 2025, things were supposed to sunset. I mean, from the Jobs Act and tax cuts, those were supposed to go away, and we were going to revert back to our old tax standard deduction and the old brackets. Those have been extended indefinitely. So we would have been paying a lot more in 25 had they not been extended. So there are cuts, but you've gotten used to them over the last 7 years, essentially. So, but yes, there really are nice cuts, and there are other benefits to it.
Okay. You know, one of the big things Aaron and I have run into when we sit down in our financial meetings a lot of times, I'm sure you've probably heard this too, and maybe you can put some light on this. We have people come in and say, what about this no tax on our Social Security? Is this a false thing, or what's going on there?
So what it is there's a benefit for people over the age of 65, really not tied back to your Social Security, but it does benefit people over 65. For everyone on your tax return, for singles, you get up to $6,000 additional deduction, or for a married couple, up to $12,000. This is on top of either your itemized deductions or your standard deductions, so it is benefiting a lot of people. One thing to note is it does start to phase out at $75,000 for singles and $150,000 for single married people. You start seeing a reduction in that amount of the deduction you get, but for the majority of my clients, they have seen this be pretty helpful to them.
Okay. Well, what are some of the things in the big, beautiful bill that are noteworthy to talk about?
So most people have heard about the tips, no tax on tips, no tax on overtime, which it is true again with caps. But the one thing that is notable is you're still getting that overtime. It's the overtime premium on federal law, meaning if, for instance, you make $50 an hour, and when you get overtime, you get that time and a half, so you get 75. It's the 25 that you get the deduction for, and it has to be over 40 hours because California has some more stringent laws than the federal does for overtime, so it has to be what the federal law is, not California law. Another thing that I think a lot of people haven't really heard about and seems to be kind of underreported on is the deduction for interest on new car loans. There are some things you have to know here, that they have to be cars bought in or after 25, cars made in the United States, and new. And if that's the case and you are carrying a loan on those, you can have up to a $10,000 deduction, and that's above the line. So it's not on top of your itemized deduction or your standard deduction. It's an above the line $10,000 write-off.
Now,
up to $10,000.
Does it have to be American made?
It does have to be American made.
Okay.
Thank you for pointing that out. Yes, it has to be American made. And surprisingly, I've had a lot of clients check, because there's a lot of cars that I don't think are American made, and they are, and there's cars that you think are American made, or they aren't. So before you purchase one, if you're thinking you want to get this, make sure it's going to qualify.
So everybody rush out and get a new car as soon as you can. Well,
another thing, it's kind of continuing on, sorry to interrupt you. The other thing that people have been benefiting for this year is the SALT limitation has been changed. When I say SALT, that's state and local tax. So like what you pay for income tax, your property tax, your sales tax, DMV stuff, that was in the past few years been capped at 10,000. So now it can be up to 40,000. So we're seeing people who were taking the standard deduction, but they pay a lot in taxes, it's become beneficial. They're back to itemizing. So that's something you want to pay attention to too. That's been helpful. And, the $2,200 for child tax. A lot of us probably aren't have children, but some people do have grandchildren and stuff on their tax returns. Is you got $2,200 for every child under the age of 17 that is there, and that's going to be adjusted for inflation as the years go by.
Okay. Is there anything else that you can think of in the bill that would be beneficial to point out?
I think that, the one thing I do want to make note of here for people is that the IRS is not going to be issuing checks. So when you go to your tax person, make sure you take direct deposit because that's an important thing. They won't send you a check and it's going to tie up your refund if you don't have your direct deposit information on your tax return. For the most part, I think that's it now. There are some things in 2026, but we'll talk about those in a minute.
Okay. And kind of all this being said, our office is here in California. It's where our tax office is. Is there any changes for specifically California?
There's several, but the one thing I'd really like to point out that's kind of a big deal for a lot of people is a military. For anyone getting a military pension, up to $20,000 of that won't be taxed in California for the next 5 years. So it's helping out our vets. So it's a great thing. Speaking of which, I want to kind of go back to the other things that we've talked about, the $6,000, the tips and the overtime. One thing to note here is they're set for 4 years, meaning only for 4 years, 25, 26, 27, 28, and those might be gone. So especially the 6,000, if you're, over 65, you might want to kind of look at, hey, why have this? Is there some things I could do to take advantage of this while we get this extra $12,000 deduction?
Yeah, my daughter was pretty excited about the no tax on tips. It was her first year working and she was working at Applebee's. So yeah, she was pretty excited about that. So.
Yes, it is good.
Well, what about next year? Are there more changes coming or are things going to stay the same?
They're like the things above are going to stay, but there are more changes coming. The one that it's kind of the most significant, I would say, is charitable donations. We're going to have above the line write-off for charitable donations, meaning even though you don't itemize, as long as you give, you can take up to $1,000 for a single or a $2,000 deduction for married people. And you don't have to itemize to get that. However, if you are itemizing and doing charitable donations, it's now going to be subject to a 0.5% floor, meaning you only get to write off above that floor. So if you make 100,000, that's 5,000. So you only get, or is that right? No, it's 500. So only above the 500. So it's going to be reduced. Your write-off for charity is going to be reduced some.
Okay. Well, are there any other items that you think are notable?
Yes, because we do live close to Pechanga here, and I know we have people who enjoy gambling, which is fine. But the one thing I do want to point out is starting in 2026, only 90% of your losses can be written off against your winnings. So if you win $30,000, only 90% of that can be taken as a loss as long as you actually lost that. So you're going to end up having to pay tax on 10% of all your winnings. Okay. So just kind of be aware of that. I would suggest when you win, and they're not reporting until it's above 2,000 now, which is helpful. But if you win, I always advise my clients, have them withhold 20% so it doesn't hurt you so much when it comes tax time.
Okay. Well, what things would you say would be beneficial to people when they are doing their tax planning?
Make sure, they're taking advantage of the things that are out there. And the one thing I kind of wanted to point out that's fairly new is the charitable donations, qualified charitable distributions. And this is when you take money, if you're giving to charities, a lot of times you're not getting the benefit of it because you're taking the standard deduction. And if you're someone who wants to do some giving, starting at age 70 and a half, you can do this directly from your IRAs. and it's then not even ever doesn't go on your tax return at all. So it's a real benefit for people who want to give money is to do these through their IRAs. I would definitely talk to whoever's handling your IRA, to your tax person, because there's some rules you have to follow. But if you are doing charity, definitely consider looking into that, because that's going to be a big saver.
Yeah, and I would say, Aaron and I having the financial part of the business in this, I would say one of the big things you should look at as tax planning, it is part of your financial plan. It's also part of your income planning and everything, because it all works together to be part of your overall retirement plan. I think that's important to remember, to have all those things in order to work together. Okay. So we'd like to thank you for taking some time out of your busy day. I know you're busy in the tax office right now, and hopefully we can get back with you in the future here for some more questions. And we thank you for coming. Our main goal at the Duane Johnson Group and Bridger Financial Services is to make sure our clients know that they make it to and through retirement and can spend with confidence during those years. We want to make sure they have financial security in any economy. We help people make great decisions so they can enjoy an amazing retirement. So thank you for listening to the Retirement DNA podcast today. If you'd like to listen to a past podcast, check out retirementdnapodcast.com. If you have any questions or would like to sit down with us for an initial consultation and see if you are on track to meet your secure retirement, please give us a phone call at 951-244-6702. If you like what you've heard, please subscribe to podcasts, and please tell your friends and family if you think they would benefit from hearing this information also. Also check us out on DuaneJohnsonGroup.com and BridgerFinancialServices.com. Have a great day.
Investment advisory services offered through Bridger Financial Services, LLC, a registered investment advisor in the state of California. Insurance products and services are offered through Duane Johnson Group, LLC, affiliated company. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Duane Johnson Group, LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Duane Johnson Group, LLC.